Hey, Open Trades! I wanted to do a requested stock update from last night. Super Microcomputer has been a name that's come up a lot. Marvell, Tesla, Arkk, and Roku are going to be the rest in this video. So looking at this fundamentals, we have about 14, almost 15 billion in annual sales, 1.2 billion in annual income. That's pretty profitable for a growth name like this. Looking at some more under the hood, an interest coverage ratio of 66.58, profit margins, return on assets, and return on equity, all very positive. Institutional shareholders and insider shareholders added together is over 100%. So all of that is pretty positive, even suggesting that there are some people with warrants in play that are still holding them. Super Microcomputer designs, develops, manufactures, and sells energy efficient application optimized server solutions based on the x86 architecture. The company's solutions include a range of rack mount and blade server systems, as well as components. Supermicro emphasizes superior product design. That looks like a lot of advertising. They have a uncompromising quality control to produce industry-leading server boards, chassis, and server systems. These server building block solutions provide benefits across many environments. This is one of the big semiconductor stocks that we've seen go on a rally that's really kept up with NVIDIA for a long time, and we've seen a much deeper correction from Super Microcomputer. So this does not have a yield max ETF. Well, I guess I did chart this a long time ago. Anyway, looking at the stock in the all-time chart, if it's got to be perfect, from this low, we see the 2020 low. We have a large wave one. Maybe we can get a closer low than that. Is that the all-time low? Yeah. So it looks like that would be the proper way to go about it. So in that case, using the monthly makes more sense. But yes, from this low, we do have an interesting sequence. A 1, 2, 3, 4, 5 waves impulse is what I believe forms. And now we can look at this pullback and see some interesting aspects of it as well. Look at this wave 3 making the highest high, not on the weekly. So it looks like the highest RSI reading is going to be that March 2024 high on the weekly and the monthly. That would suggest in the all-time charts that this was not this whole rally was not one large wave 5, because wave 5 ends with momentum divergence, and there is no momentum divergence, suggesting one day this stock is going to go break this high. That's from an Elliott wave theory perspective, not a risk management perspective. Definitely not a perspective that can be told to the broker, as I like to say. And another thing is that this doesn't have a yield max ETF or any way to get option premium income from it. It's got a reverse split, a stock split coming up. So this price is going to be a little lower, but I would have really loved to see those huge premiums on this stock be collected. I thought with the popularity it gained, that might be a possibility. We're going to look at some aspects of this ABC correction right now. See if we can justify picking a low. This high is 1229 flat. this low all the way back in March 2020 is 15.76. Wow. What a run. So we see right at the 61.8% retracement. Quite an interesting level. From this high, it's going to be about measuring this ABC correction. And that's why I think the weekly is going to be a little easier to do. That was 3/20/24. There we go. So measuring from this high with the extensions A, B, C, we see this is at the 161.8% extension, and it's gone a little past it. Let's measure this from the daily chart and just focus on this ABC correction. Right there at the 161.8% extension. We can see that's where this ABC correction ended when it's labeled properly on that daily time frame. I actually think it can be measured from this high, and that's just where wave B ends, right there. So this is 855.0, 1106.11, and this high was 1229 flat. So we can see Supermicro Computer went right to the 61.8% retracement and the 161.8% extension of the length of wave A placed at the wave B high for wave C. So that's some of that Elliott wave suggesting that low can be picked and above 478.56. That's going to be the downside, and the upside, really, as wild as it sounds, would be something along the lines of taking the entire length of this rally and placing it at this low. And a pretty extraordinary wave 3, wave C number is going to pop up saying SMCI, which is going to be a post-split price, could one day not just break 1229 again for wave 3, wave C, which is what would be referred to as the minimum expectation. It could also go all the way up to the 1600s in the long term. It's going to take a while, and it's not going to pay a dividend along the way, but about 478.56. That is the Elliott wave expectation. I wanted to give a little bit of supporting evidence in this semiconductor sector. Not just, I know it's not the exact same stock, of course, but Marvell Technologies has a pretty clean nest. The invalidation's rather wide, at this point. But it's another name that might suggest that's not too pie in the sky for SMCI, which is, of course, how it's always going to seem at the major lows. So this ABC correction and then a wave 1 and wave 2, we're going to look at this from this low. It's quite clean, a really pretty impulse. On the daily. And this might be a useful measure for more intermediate term time frames for the semiconductors. If that does end up being a major low struck in early August, how high this sector can go and how much of that correction is going to allow for kind of one step forward and or one step back and 2 or 3 or 4 steps forward. If we look at Marvell Technologies, it looks like it's going to round out the right side of this base and end up making new highs like Nvidia, like AMD, like Applied Materials, like SOXX. And it is getting far from this, but it's just so pretty. 1, 2, look, wave 3, highest high in the RSI, shallow wave 4, wave 5 ends with momentum divergence, very clean. A, B, C correction. One way to get a tighter level that's not really useful. Yeah, they've got 61.84 is the trailing stop. 61.84 isn't too bad. And then another way, when a stock just has this big jump like that, wave 2 is going to typically be invalidated at the 78.6% retracement, especially when it's within a big wave 3 of wave 3, 53.19. And this high is 72.58. So this is another way to get a downside level when a stock just really rips like that. I'll say 57.34 invalidates. And then the upside, quite easy to define. The length of wave 1, place at the wave 2 low is the minimum wave 3 target. We'll probably go higher than that, which can be found by taking the 127.2% extension. So we could see this go run up to the low 90s, the mid 90s, before a shallow wave 4 and a wave 5 higher. And that entire sequence could take Marvell Technologies up to 124 if wave 4 retests the wave 1 high. And wave 5 is the length of wave 1 placed at the wave 4 low. And that would end this blue wave 3 before a wave 4 correction. So Marvell Technologies kind of sending a more aggressive evidence or aggressive view of some of these laggard semiconductor stocks, and potentially saying don't just think it's all about Nvidia. There's other semiconductor stocks still earlier in their cycles. Looking at Tesla right now, the big picture becomes more and more into play. 1, 2, 3, 4, 5 for a large wave 1 and an ABC wave 2. A big wave 3 of wave 3, I suspect, is in progress, but still the most useful and meaningful. The original invalidation we're quite far from. I think that a cleaner way to count Tesla is that this is 1, 2, 3, 4, 5 for a large wave 1. This is an A, B, C correction. And I've measured the length of wave A, place of the wave B high, being where wave C ends right here. So that's what this box is showing, enough to correct the cycle really nicely. And then from this low, there's a few aspects about this. First, wave 2 ends a little before the 78.6% retracement, 271. And 138.80. And so the 78.6% fib is 167. It's too far to be useful right now, but that's a meaningful level if something did happen to the downside. We're at the 61.8% retracement where wave 2 ends, so the wave 3 more near-term target is found by taking these extensions. That's what that 100% level is going to show. But for a stock like Tesla entering a wave 3 of wave 3, it's useful to know what that 127.2% extension is going to be. 138.80. 271 flat, and this low was 182 flat. Interesting. So it's going to look like this. That wave 3, the tighter wave 3 target is 314. If Tesla does go break this high, that's going to be quite significant. Bulls are going to really want to see 70.19 broken on that RSI. A more useful wave 3 target. Look how it perfectly lines up. Look how it perfectly lines up with the negative 61.8% extension of wave 1, just taking wave 1. That's 352, and it's almost identical to the 127.2% extension of the length of wave 1. Placed at the wave 2 low. So 350, 352 looks like a really nice wave 3 target. Then there can be a wave 4. Wave 4 is the 38.2% retracement of wave 3. That 61.8 fib is going to give it. I can just eyeball it, honestly. And then wave 5 is the length of wave 1 placed at the wave 4 low. So that's really clean. And it's a little more accurate, I think, of what Tesla could look like. Seeing this large wave 1, wave 2, wave 3 sequence in blue. I think that in the long term, 334 for this blue wave 3 is going to be a little tight. I think that's actually going to be wave 1, wave 2 closer to the black wave 3 target before a wave 4 and a wave 5 higher to end this large wave 3 in blue. And that all looks really nice above 182. I've talked about risk management with Tesla and what I'm doing in a previous video with CRSH and TSLP, which I'd encourage people to watch. Looking at Arkk right now, the long-term picture is interesting to know. For this video, though, I think we're just going to focus on within the cycle from this low. I've talked about, I've talked about PayPal and Shopify recently. We're going to do Arkk and Roku in this video to keep rounding out the sector. PayPal, just to remind, has given a good amount of evidence. It's within wave 3 of wave 3 from this low. Wave 1, ABC wave 2, and then from this low, 1, 2, 3, 4, 5. Wave 3 makes the highest high on the RSI, shallow wave 4, and a wave 5 that ends with momentum divergence, an A, B, C correction. And then we've seen this wave 3 minimum target be hit and we made a new high on the RSI. So that's all going to suggest that PayPal is within wave three of wave three. I've marked it up like this, and I've gone over this in recent videos with Shopify. And there's plenty of leading indicators in this sector too. Kathy Wood just happens to sell all of them right before they run off. But we're going to talk about some of the ones that she stuck onto. And the way of the world and the market is going to be interesting to see how this rotation allows Kathy Wood's sector to play catch up. Even though she keeps selling the winners, she happens to have held on to some interesting stocks. This is a 1, 2, 3, 4, 5 waves impulse for Shopify. Wave 1, ABC, wave 2, and a wave 1, wave 2, another wave 1, and another wave 2, just like PayPal. So I suspect PayPal is leading Shopify, and I'm looking for something like this. So that's more supporting evidence for Arkk. So that's why I'm not going to go into the big time frames. We're just going to focus on this weekly time frame from this low with Arkk and with Roku. So we see a large wave 1 and a large wave 2. Somebody requested, and I thought it was a very interesting request. They requested ArkW. That looks like a big leader of this ETF. And of course, they're going to be very similar charts. I'm excited to go over that one. The levels for this are rather explosive, and all of these kind of genomic stocks, these new age healthcare stocks, these lockdown stocks. We have this monkeypox spreading. We have potentially a new president that's been vocal. She would support, whatever it takes to end the next pandemic, based on what she said during the previous one. And even the other candidate is proud to call himself the father of the vaccine. So it's and I do think it's appropriate to say that there's an election coming up, and some people think that it would be prudent for whoever is in charge to maybe have a scary event, declare an emergency before that happens. Everything's always on the table in the stock market. There's no risk scenario, especially when all of the charts are singing a similar song, and the stuff is there politically, that finance people laugh at. All of the best people in finance, they do think about what would happen if the CBOE collapsed. They do think about what would happen if some of these naked shorting doomsday scenarios played out in the financial system. And to be honest, they think about what some of these real world doomsday scenarios would think about in the financial system. And in the movie Leave the World Behind that came out, they have this one character. He's a finance guy. He's seen beyond the curve, and that's why he knows a lot of the stuff that's happening, and he's not really surprised by it. That was a very accurate part of that movie. And of course, certified financial advisors, they can't come out and go say, hey, the nuclear stocks and the pandemic lockdown stocks, they're really kind of reading into this monkeypox and new president administration. There's no commercial viability in that. Anyway, a large wave 1 and an ABC wave 2 for Arkk, and then a wave 1 and another ABC wave 2 correction. I mean, the people laughing at some of the stuff, they look at the UFO charts, they look at co-diagnostics, they look at Peloton, and they have to go move on to the next stock that hasn't exploded yet. And what they don't realize is they're just going down the gauntlet and picking the next stock in the rotation. This is a wave 1, wave 2, large wave 3 in blue in progress, wave 1, ABC wave 2, wave 3 in black. before a shallow wave 4 and a wave 5 higher. It's getting a little wide, but 36.85 is going to be that meaningful invalidation. And then I've talked about PayPal and Shopify just in this video. But yeah, in the longer degree, I did think she had a very interesting post about how her fund has these tax losses that they can harvest for years and years to come. And everyone laughs at that. But then we get this new administration who says they would think about a tax on unrealized gains to the tune of 44.6%. And you look at Mrs. Wood's sector, and she has a lot of stocks that would quite benefit to the upside, theoretically, during the Harris administration. And now the capital gains tax even. Makes me wonder if there's a little bit of a girl power theme. Girl power. The divine feminine. The fund's called Arkk, and it's managed by Wood before a liquidity flood. Come on now. But yeah, so 36.85, it is wide. So I'll give these big time targets. If that holds, I don't know if there's going to be a literal flood. I'm just kidding. I think I do. But the Arkk is going to be very important for the metaphorical one. Looking at Roku right now, in this big degree, it's a glorious impulse. This is 535. They don't make these easy. But this is 535. The next Netflix. Go look at Netflix's charts in 2011, and the many times Netflix had 78.6% retracements. Go look at Amazon's. Amazon was the next Amazon. Remember that? When I had to convince that Amazon was the next Amazon at the 78.6% retracement. If Amazon's going to be called not the next Amazon in 2022, you think the next Netflix is going to be called the next Netflix in 2024? Palantir, the next Microsoft. Looking like it. Looking like it. Trying to get all those defense contracts. This is the big 1, 2, wave 3, highest high. Wave 4 and wave 5 ends with Momo. The next Netflix, man. 1, 2, wave 3, 4, 5. I think this is an expanding diagonal. Wave 1. ABC wave 2, the 78.6% fib. These targets can be found. Wave 1. Wave 2. Something like this. We got 38.26, 108.65. And this low is 48.33. That's too far of an invalidation right now, but that is the invalidation. And then it would look something like that. That wave 3 target is going to be this 127.2 to negative 61.8%. Extension of wave 1 is this top of the box, the 127.2% extension of the length of wave 1 placed at the wave 2 low. This ideal wave 3 target for a shallow wave 4 and a wave 5 higher. If wave 4 retests the wave 1 high, or if it's more simply the 38.2% retracement, which upside down is going to be the 61.8% retracement right there. I'll use the 78.6% fib. And wave 5 is the length of wave 1, placed at the wave 4 low. I'll need to move these in. It would look something like this. I'm looking hopefully for a pullback against 48.33. Probably just because I said that it won't come, but that's the invalidation. The upside target could take Roku up to 137 to 152 before a shallow wave 4 and a wave 5 higher up into the upper 180s.